Good morning, it's Market Day Report. USDA has their Ag Outlook Forum going on today and tomorrow. Already this morning, 7 o'clock Eastern time, out with some crop projections. This would be planting for 2025. Now, officially, we won't get their planting intentions or projections until the end of March, but they do have 94 million acres kind of as the marker, if you will, for where we could be here in 2025. 94 million acres, up 3 million from last year. Beans down 3 million acres, 84 million. Wheat at 47 million, that would be a little less than 1 million acres higher. And cotton down over 1 million acres at 10 million. So kind of sets the stage for our conversation coming up in a moment with Ted Seifried. All right, let's go to the markets. We'll start with Chicago and corn. New crop 4 3/4 lower, 462 1/4. The March contract hits first notice day tomorrow, 470 a bushel there. And then to soybeans, the trade coming off of a fairly decent amount of inspection for export sales. The export sales numbers out from USDA, and they said 971,000 metric tons, up 31% from last week, and a 3% increase over the 4-week average. Higher across the board for beans this morning. Wheat market, Chicago, July contract remains under pressure. Look at that, 578. It's down 15 3/4 cents. We'll try to pop up a chart on that in a moment when we're talking with Ted. Hard red, July contract down 15, 596 1/4. And spring wheat, again, 6 consecutive days lower. D's at 650 1/4, down 9 3/4 cents. Finally, cotton market, New York, 28 higher, 69.03. Ted Seifried's Vice President, Zaner Ag Hedge. All right, Ted, where do we go with all this information?
Yeah, lots of numbers today, Tony. And, I think the trade really looks at just sort of the bottom line numbers for the Ag Outlook Forum. We all know that this is just statistical pencil pushing. This is not, when you talk about acreage, the 94 and 84, nice round number for them. These are just kind of projections. They're very loose. The actual acreage number is a survey. Planting intentions is a survey. Planted acreage is a survey. This is not a survey. This is statisticians in Washington putting together some numbers and just kind of a general idea. So we do take this with a grain of salt. But I mean, you look at the carryover, and if you really kind of dig into it, they give a full balance sheet. So you look at where the growth is coming in demand and things like that, and you got to say they're really pessimistic on any sort of growth in demand for corn. And I think that's what may be leaning on corn here just a little bit today. And their bottom line number is just shy of a 2 billion bushel carryover. I think the trade was looking for something closer to 1.8. And then, for soybeans, they got, I think, a little bit more aggressive with demand than I would say, actually, given the pace of export sales that we've had recently, although a little bit better today. We'll get to that in a second. And a 320 million bushel carryover. So a shrinking carryover in soybeans. And I think that's giving a little bit of strength over to soybeans. So I think that's a rough reflection of what the market's doing right now. Then you take that into export sales. We're really rather disappointed for corn. It seems like the last couple of weeks, corn has really slowed down. But at the same time, soybeans have kind of rebounded a little bit. I mean, we're not talking big numbers, Tony, but these are numbers that, this is the time of year where we see our export windows slam shut for soybeans. And it seems it hasn't really completely slammed shut yet. So that's a little bit friendly, too. You put all that together, you've got markets moving in different directions. We'll see how we end the day. But, corn seems to want to really be heavy on this sort of news, the combination of export sales and the ag outlook. Beans are bouncing off their key support level again, but we'll see if they can hold on. I feel like king corn might have the win here today.
Yeah, not to mention the corn to bean ratio being under 2.4. That's the lowest level we've seen since 2013. We'll take a break. We'll come back in a moment. We'll dig into the proteins. Hope you'll come back and join us. Market Day Report continues after this. Well, we're still waiting for cash trade to develop. Asking price is 200, which is right in line to where we were last week. Would be $1 higher from the south, but right in line with the north. But the bid still sitting at 197, and we'll see where it goes. Let's look at this. It's a chart for live cattle, and again, nice little peek in at the end of January. As we go from the chart, though, over to where we trade today in the futures. And I wanted to set the stage because we're at 199.35 on the February, up 52, and 85 higher on April, make it 77 now at 195.40. To the feeder market, and third straight week of lower slaughter numbers, something to keep in the back of our mind. April 274.50 on the feeders, that's up 97. And over to hogs, hogs breaking that 5-day losing streak yesterday, but back in the red. Deeper losses today, May off 305, 89.40. Let's go back to Chicago and Ted Seifried. Ted, what are you watching?
Cattle complex, right? You've had a really nice bounce off of support in feeder cattle over the last week or so. That's really tied into, more cases of New World screwworm being found in now 4 different states in Mexico, and maybe concerns that we could close the border down again. Either way, it seems that we might be reluctant to bring in a whole lot of cattle from Mexico. That even goes back to our placements number that we saw last cattle on feed. But live cattle have really had a hard time, picking themselves off of support or having that significant bounce. We like to say feeders are the leaders, but in this case, feeders kind of did their own thing. And I think that is a reflection of continued concerns about the economy. Now we have stocks bouncing pretty well today, but they've done really not much to try to negate the big slide that they've seen in the last 10 days or so. So there's still that pessimism or concern about what consumer demand might be for higher priced beef. And so that's weighed on live cattle, even though here today we're trying to be higher. We just haven't enjoyed that sort of bounce that we've had in feeders. And then hogs, man, you got some hope after yesterday's turnaround higher, but they're taking that back away again. It seems that this market is on a technical mission to go and test the key support that we have underneath us in the form of the 100-day moving average.
Okay, before we let you go, let's talk dollar index for a moment. Has been down 1% week over week. Month over month down 1%, down 1.5% year to date. We are higher today. Are you keeping an eye on this?
Yeah, of course, and it is flying today, Tony. And look, if you chart the dollar, which there's not a lot of people that love looking at dollar charts because it's a conglomeration of other currencies. Either way, we got to the 100-day moving average. We held it for 4 days in a row, and now we've had a very significant bounce off of it. I think there's a lot of reasons, both fundamentally and technically, to say that, hey, the dollar's probably put in its corrective low and now has upside potential based on economic concerns, based on a whole bunch of different things. And that could be a headwind for commodities as a whole. So keep an eye on that.
Yep. Perfect. Ted, thanks for jumping in and joining us. By the way, he's on the radio tomorrow, Commodity Wrap in the afternoon.